Gold just crashed from $5,600 to $4,400 in 3 days. Silver fell from $122 to just $70. This is the biggest crash in precious metals history. Over $1 trillion vanished from the market in 72 hours. If you own gold or silver, if you're thinking about buying, or if you just want to understand what's happening in the economy right now, you need to watch this entire video because what happened last week will change everything about precious metals investing forever. Today is February 4th, 2026, and I'm going to show you exactly what caused this historic crash, who lost billions of dollars, and most importantly, what's coming next. Stay with me because by the end of this video, you'll understand the gold and silver market better than 99% of people out there. Hey everyone, welcome back to Con Invests. I'm your host, and today we're diving deep into the craziest week in gold and silver market history. Before we start, let me give you the current prices as of today, February 4th, 2026. Gold is trading at around $5,036 per ounce. Yes, you heard that right, $5,000. Silver is at $91 per ounce. Now, if you're wondering why these numbers sound insane, that's because they are. Just 1 year ago, gold was trading around $2,800. Today, it's almost doubled. Silver was at around $31 per ounce last February. Today, it's almost tripled. But here's where it gets crazy. 3 days ago, gold was at $5,595, and silver was at $122. Then everything collapsed. If this is your first time on Con Invests, we talk about smart investing, market trends, and how regular people can build wealth. Make sure to hit that subscribe button and turn on notifications, because the content I share here can literally save you thousands of dollars or help you make thousands more. Now let's get into the story. Let me take you back to understand how we got here. When Donald Trump became president again in January 2025, something unusual started happening. Gold prices started climbing. Silver started climbing. Every single week, they went higher and higher. Investors around the world were nervous. Trump is known for making bold, unpredictable decisions. He threatened countries, talked about taking over Greenland, and kept saying he wanted to fire Jerome Powell, the chairman of the Federal Reserve. All this chaos made people scared. When people are scared about the economy, they buy gold and silver. Why? Because gold and silver are real. They're physical assets. You can hold them in your hand. They don't disappear if a company goes bankrupt or if a government prints too much money. They've been valuable for thousands of years, and they'll be valuable in the future. Between Trump's inauguration in January 2025 and the end of January 2026, gold prices nearly doubled. That means if you owned $10,000 worth of gold, it became $20,000. Silver did even better. It increased almost 4 times. Imagine turning $10,000 into $40,000 in just 1 year. That's exactly what happened to silver investors. Central banks around the world were also buying gold like crazy. China, Turkey, India, and many other countries were buying tons of gold every month. Why? Because they don't trust the US dollar anymore. The United States has $38 trillion in debt. That's the highest in the world. When a country has that much debt, other countries get nervous. They think, what if the dollar loses value? So they buy gold to protect themselves. On Thursday, January 30th, 2026, gold hit an all-time record high of $5,595 per ounce. Silver also hit its highest price ever at $122 per ounce. Everyone was celebrating. Gold investors, silver investors, coin dealers, mining companies, everyone was making money. People on social media were posting pictures of their gold bars and silver coins. Some famous investors like Robert Kiyosaki were predicting silver would go to $200 or even higher. Then Friday came, and everything changed. On Friday, January 31st, the unthinkable happened. Gold dropped 10% in a single day. 10% might not sound like much, but in the gold market, that's absolutely massive. Gold usually moves 1 or 2% in a day. 10% is an earthquake. Silver crashed even harder. It fell 28% in one day. 28%. People who bought silver on Thursday lost almost 1/3 of their money by Friday evening. The crash continued on Monday, February 3rd. Gold dropped another 4.5%. Silver fell another 6.5%. In just 3 days, gold went from $5,595 to around $4,400. That's a drop of almost $1,200. Silver went from $122 to around $70. That's a 40% crash. Let me put this in perspective. If you invested $100,000 in silver on Thursday, by Monday you had only $60,000 left. $40,000 just vanished. This was the biggest percentage drop in silver prices since the 1980s. For gold, it was the biggest drop since the 2008 financial crisis. The financial news networks were in shock. CNBC, Bloomberg, Fox Business, everyone was talking about it. Social media exploded. People were panicking, asking what happened. Should they sell? Should they buy more? The truth is, many people lost life-changing amounts of money. Small investors who bought at the top were devastated. Some people had taken out loans to buy silver thinking it would keep going up. Now they owed money and their silver was worth 40% less. It was a disaster. So what exactly happened? Why did gold and silver crash so hard and so fast? Experts have different opinions, but here are the main reasons. First, profit taking. When an investment goes up too fast, professional investors start selling to lock in their profits. Think about it. If you bought silver at $30 and it went to $122, you made 4 times your money. That's an incredible return. Many smart investors decided to sell and take their profits. When big investors start selling, it creates a chain reaction. Other people see the price dropping and they panic and sell too. This creates even more selling, and the price falls faster and faster. Second, the prices had become overvalued. Many analysts were saying that gold and silver had gone too high too fast. The fundamentals didn't support these prices. Yes, there's uncertainty in the world. Yes, central banks are buying gold, but $122 for silver? That was probably too much. Mark Matthews, a top analyst at Bank Julius Baer, said the metals had gone parabolic, which means they rose too steeply. When something goes up that fast, it usually comes back down just as fast. Third, Trump made some calming announcements. On Friday, Trump announced he would nominate Kevin Warsh to lead the Federal Reserve. Warsh is seen as a safe, conventional choice. Investors were worried Trump might choose someone crazy who would do whatever Trump wanted. But Warsh is respected and independent. This made investors feel better about the economy. Trump also said he wanted to make a deal with Iran instead of attacking them militarily. These announcements reduced fear in the market. And remember, gold and silver go up when people are afraid. When fear decreases, gold and silver prices can fall. Fourth, there was a technical issue with margin requirements. The exchanges where gold and silver are traded increased something called margin requirements. This means people who were borrowing money to buy gold and silver suddenly had to put up more cash. Many couldn't afford it, so they were forced to sell. This added even more selling pressure to an already falling market. Fifth, the US dollar got stronger. Gold and silver are priced in US dollars. When the dollar gets stronger, gold and silver usually get cheaper because people using other currencies find them too expensive. On Friday, the dollar index went up, which put pressure on precious metals prices. All these factors combined to create a perfect storm. It was like a dam breaking. Once the selling started, it couldn't be stopped. But here's the interesting part. On Tuesday, February 4th, just 3 days after the crash, gold and silver started recovering. Gold climbed back up by almost 6% in one day. Silver jumped 12%. By today, February 4th, gold is trading around $5,036. It's already recovered almost half of what it lost. Silver is at $91, also recovering strongly. Why the recovery? Because smart investors realized this was a buying opportunity. They know the reasons gold and silver went up in the first place haven't changed. Trump is still unpredictable. The US still has $38 trillion in debt. Central banks are still buying gold. Inflation is still a concern. The fundamental reasons to own gold and silver are still there. Major investment banks are still very bullish. JP Morgan released a report saying they expect gold to reach $6,300 by the end of 2026. That's a 30% increase from current prices. Goldman Sachs analysts say gold could hit $5,400 in the coming months. Bank of America predicts silver will average around $56 in 2026, but could peak at $65 or higher. Citigroup, one of the biggest banks in the world, has an even more aggressive forecast. They predict silver could reach $150 per ounce. $150? They say there's a serious shortage of physical silver. Mines can't produce enough to meet demand. Silver is used in solar panels, electric vehicles, electronics, and industrial applications. Demand is growing every year, but supply is not keeping up. So what should you do? Should you buy gold and silver now? Should you sell if you already own some? Should you wait? Let me share my thoughts. But remember, I'm not a financial advisor. You need to do your own research and make your own decisions. First, understand that gold and silver are volatile. That means prices can swing wildly up and down. What happened last week proves that. If you can't handle seeing your investment drop 40% in 3 days, then precious metals might not be for you. You need to have a strong stomach and a long-term view. Second, don't invest money you need in the short term. Gold and silver are long-term investments. You should be willing to hold them for years, not weeks or months. If you need money for rent next month or for an emergency, don't put it in gold or silver. Only invest money you can afford to leave untouched for a long time. Third, dollar cost average. This means instead of investing all your money at once, you spread it out over time. Maybe you buy a little bit every month. This way, you buy when prices are high and when they're low, and your average cost ends up somewhere in the middle. You avoid the risk of putting all your money in right before a crash. Fourth, physical metal versus paper. Some people buy physical gold and silver coins or bars. Others buy paper assets like ETFs or futures contracts. Physical metal is safer because you actually own it, but it's less convenient and you have to store it safely. Paper assets are easier to buy and sell, but come with counterparty risk. That means you're trusting someone else to actually have the gold or silver they say they have. Both have pros and cons. Fifth, diversification is key. Don't put all your money in gold and silver. Have a balanced portfolio with stocks, bonds, real estate, and yes, some precious metals. A common recommendation is to have 5 to 10% of your portfolio in gold and silver. That's enough to protect you if the economy crashes, but not so much that you lose everything if metals crash. Let's zoom out and look at the bigger picture. What's really happening here is a crisis of confidence in the global financial system. For decades, the US dollar has been the world's reserve currency. Countries hold dollars, trade in dollars, and trust dollars. But things are changing. The US has printed trillions of dollars in recent years. The national debt keeps growing. Trust is eroding. Countries like China, Russia, India, and many others are reducing their dollar holdings and buying gold instead. This is called de-dollarization. It's a slow process, but it's happening. As more countries do this, demand for gold will keep increasing, which should push prices higher over time. Silver has a unique situation. It's used in industry much more than gold. Every smartphone, every solar panel, every electric car contains silver. As the world moves toward green energy and electric vehicles, silver demand is exploding. But silver mines are not keeping up. There's a supply deficit, meaning more silver is being used than is being mined. This should push prices higher over the long term. Climate change, political instability, potential wars, inflation, all of these create uncertainty. And uncertainty drives people to safe haven assets like gold and silver. Unless we suddenly have world peace, economic stability, and responsible government spending, which seems unlikely, the reasons to own precious metals will remain. So here's my final take. What happened last week was scary, dramatic, and historic, but it doesn't change the long-term story for gold and silver. Prices went too high too fast, so they corrected. That's normal in any market. Smart investors see corrections as buying opportunities, not disasters. If you believe in the long-term case for precious metals, if you understand the risks, and if you invest money you can afford to leave untouched for years, then gold and silver still make sense. But you have to be prepared for volatility, you have to be patient, and you have to do your research. As of today, February 4th, 2026, gold is at $5,036 and silver is at $91. Both have recovered significantly from their lows. Whether they'll keep climbing to new highs or crash again, nobody knows for sure. That's why you invest carefully, diversify, and never risk more than you can afford to lose. Thank you so much for watching Con Invest. If you found this video helpful, please hit that like button. It really helps the channel grow. Subscribe if you haven't already, because I'll be covering market updates, investment strategies, and wealth building tips regularly. Drop a comment below and let me know, do you own gold or silver? Are you buying after this crash or staying away? I read every comment and I'd love to hear your thoughts. Until next time, invest smart, stay informed, and remember, knowledge is your greatest asset. This is Con Invests signing off.